Ladies and gentlemen, welcome to Money Mavericks. We have had some interesting guests and interesting investments over the last year or two that we've been doing this. This one's pretty interesting. We got Jillian Murrish. She's from Pier Management, and she is in the business of financing and buying royalties to music and a whole bunch of other stuff. Jillian, welcome to the show.
Thank you for having me.
All right, so number one, I know you were a Goldman Sachs person, et cetera, and you sort of saw this industry go up. But for the audience, can you sort of say how this royalty investing world has, morphed into this like billion-dollar industry?
Sure. So, music royalties is now an official asset class in ABL. I'll say that. Music
When
is
you
being
say ABL, you mean?
like asset-backed lending. So
Yes,
music
okay.
royalties are being securitized. They're being, huge amounts of leverage are being put on these and sold into the market. There are, billion-dollar trades going through of these big portfolios of diversified catalogs. So it's officially an asset class. In the early days, it was simply artists looking for liquidity and finding any financial buyer they could to buy that and give them money for it.
I grew up in Southern California, had a few musician friends, and who just had divorces and needed to come up with cash. And it was basically you need to like meet somebody in the corner of a restaurant type thing and trade over the table basically. So it's come a long way.
It is. And I would say now we're completely institutionalized with ratings, securitizations, but it is still a small asset class. And, even at the biggest events of the year, you go and you do have the Goldmans in the room and, the other large lenders in the space. But it still feels new to me, being in specialty finance, which is where we invest. We invest across small business debt, consumer debt, which have had developed markets for 10, 20, 25 years. Whereas music, really, it's in the last kind of 2 to 5 years that it's become, that institutional with the rigor that comes with rating agencies, et cetera. So
have the music companies changed the royalty rates? And there's the old days, royalty rates were pretty high. It's sort of compressed, right? Now that there's a market?
Well, yes and no. I mean, in the last 10 years, payouts to songwriters and payouts to artists have actually been increasing as a percentage of revenue. So it's, I think it's an artist-friendly community we live in. Like the society we live in is supportive of music and of the artists, and kind of takes the side of the artist over the side of the businesses. And so I think
put it to the man. Come on.
Yeah, so I think it really only behooves Apple and Spotify, which are the two biggest DSPs, the digital service providers. It really only behooves them to continue to do right by artists and say, hey, we're actually increasing the amount we pay these artists. The whole ecosystem exists because of them. So I think, in recent times, it seems like Apple is much more popular with songwriters than Spotify because of some of the bundling options that Spotify had put on the table, which have actually, frankly, like reduced the amount that these songwriters are paid out. So
what does bundling mean in English?
Yeah, so bundling could be like Spotify offering a service where they'll actually let you listen to a certain amount every month of different catalogs. And you don't, it's not just a subscription. It's like, they'll bundle it with like their podcasts. And so ultimately the amount of revenue that's attributed to the songs versus like podcasts actually ends up going down, and then that payout rate goes down. So
I see.
Apple is not, and for example, Spotify offers a free version. So you can actually listen to ads and not actually have to pay a subscription, which means the overall pie of revenue that's getting paid out to songwriters goes down. Whereas Apple does not offer a free version. And so artists and songwriters actually, have a much more favorable view of Apple right now than Spotify. Specifically, one of the topics is the free version. It's like, hey, we don't want our IP to be used for free. Like people need to pay for this.
Well, there's people listening to our show right now on Spotify.
Yes.
And what I did not realize until you mentioned it, that they have all those tiers now. I mean, I'm sort of old school here. I've had Shopify for a million years. So I could get a free tier if I'm willing to listen to an ad. Is that what you're saying?
That's right. But that revenue isn't as great as the subscription revenue. And so, again, that pie that's being paid out to these songwriters and artists is actually smaller. So it's been interesting to watch that battle between Spotify and Apple. And Apple is a bit more popular right now with the songwriters, at least.
Yeah. Why doesn't Tay-Tay just buy Spotify?
Yeah. It could be a strategy.
I mean, she only made $2 billion in revenues just on her concerts.
Oh, you
her
did?
Song royalties would choke a horse, I bet.
Yeah, I mean, it looks like she actually, if I'm remembering it right, she actually just bought back a large part of her
Yeah,
album.
I
We
saw
we
that.
don't,
Right.
yeah, we don't invest in the big trade, so I follow it just out of interest, but not out of actual investing. We're typically purchasing indie catalogs, so artists that are producing catalogs that trade that are only $5 million, $2 million, $10 million, because they're not as trafficked with the institutional buyers, and so we can get in there, pay lower multiples, receive higher yields for doing so. Instead of paying these like 20x, 21x multiples that some of these billion-dollar funds are paying for
Yikes.
the banner artists like a Taylor. So
Yeah. Well, that's a really good point. Um, you know, I guess if you're an institutional investor, and your people are asking, your institutions are asking you, well, who are you doing? Oh, listen, we got Taylor Swift, we got, Led Zeppelin, we got, but if you actually wanted to make the best yield, what you've taught me is you go after the small independents. Now,
that's
here's another
right.
question for you. I have a friend who is building a gospel cable network. So when he plays a song that's licensed, of course, then would he pay the same rate as someone playing it on the radio or so on and so forth?
Yeah, so it depends. So if it's like if he's actually creating like a documentary that's then going on this network, or if it's a TV show that's on the network or a movie, that's
Mhm.
called sync revenue. Sync revenue can be one time, like well, it's much more lumpy, right? Like when a movie
Yeah,
comes out, they pay a certain amount, so it's
sure.
contracted in that way. Whereas streaming revenue, it's multiple, hundreds and
Yeah.
thousands and 10,000s of times per day, every single day of the year, 24/7, you're getting incremental bits of revenue. So when you're pricing out these catalogs, you have to be very wary of sync. So we actually, look at the trailing 12 months revenue on a catalog we're analyzing. We'll oftentimes pull out sync revenue and not give that artist credit for it
Uh,
and say, we can't guarantee on a go forward basis that another movie or another commercial is going to pick this
right.
up. So sync revenue isn't sticky. We don't view it as repeat revenue. And so I think it's a shame. It's hard for these artists to justify like, hey, over time, I'm going to always get in movies and get in catalogs. It's just hard to predict.
Yeah. Well, all right. So I'm an artist. Okay. I have a song. I have an album out there. I'm not big name, but I appeal to, I'm sure, people about 152 years old. And so, but I get enough plays on the various things, etc. How do I, what do I, as the artist, sort of make on getting my royalties? And then what do I, as an artist, say? Boy, but if I sell it to Jillian, then I'm going to get all this money up front, but I'm not going to get continuing royalties, right?
Yeah, so there's lots of ways to cut these deals, but typically it's a life of rights sale. So they'll sell us the rights on that IP, sell their songs to us
Hmm.
for perpetuity. So we'll get paid forever. Other deals go through like 20-year deals where they'll sell the rights to the revenue on a song for the next 20 years. Some artists prefer to sell that way because they know, hey, once these songs are once I die or as I'm getting into estate planning, the rights will revert back to my estate. Then my children can start getting those
Yeah.
royalty payments. So a 20-year deal, obviously we pay less for that than perpetuity, but it can be a nice way for the artist to not feel like they're selling their rights forever, but it's a way to pull forward that 20 years of revenue, have liquidity today. The types of artists that we typically work with are smaller indie artists. And for these artists, maybe they're making 100 or 200,000 or 300,000 a year off of Spotify and Apple. It can be hard. Say they're going to buy a home, they need a large down payment. Los Angeles real estate is not cheap, and a lot of artists live here. And so to grab that 500, to build up that $500,000
Sure. Down
down
payment.
payment, you may need to sell some of your catalog or sell some years of your catalog to get that cash up front to go buy property. So it's really driven by artist liquidity needs. Like, I need a large amount of money for something. I need to go buy a house. I need to go pay for studio time and pay all the tour costs to go on tour for this album. I actually need to pay for studio time. So,
Yeah.
there's another sale. So everyone thinks of artists selling their catalogs, but there's actually a lot of other intellectual property owners of songs. So when
Yeah.
a
Get
song,
into that. When I was looking at the list, Oh my gosh,
Yeah.
the sound guy gets a royalty, the producer
Yes.
gets it, right? Who else gets royalties?
Correct. So when a song is created, the rights to that revenue can be split up amongst even 20 participants. So everything from the drummer to the guitarist to the backup
Yeah.
guitarist to the singer to the producer to the record label. And so, one area where we're seeing a lot of deal flow right now are small independent record labels who took a small cut of all the artists that they pushed out and really helped promote. And these are small businesses too, right? So record
Sure.
labels, small business, they have working capital needs. They need to go pay their employees. They need to pay their rent for the office, et cetera. And when that business runs into working capital issues, they have an asset, which are songs they own. They can go sell those songs and bring forward that capital and pay their expenses. So, small record labels are being squeezed. It's hard, it's a hard business to be in. And when they need liquidity, they don't have it's not a real estate company who can go get loans against their real estate.
Sure.
It's music. And so that's an area we've been seeing deal flow and been able to help. Also, record label owners who are just getting out of the business. So there's boomer retirees who are like, hey, I've been in this 30 years. I want to sell my business and get out. There's really not much to sell besides the actual IP they own. So it's a way to monetize and give them this retirement income or this retirement lump sum and say, hey, you're exiting the business. We'll take over that portfolio, make that yield and give you that lump sum today.
All right. So now who keeps score on all of this?
Mhm.
That always, I mean, back in the day, didn't they like do it by hand? They put it in a log book, etc. So what's the digital way that who keeps score when it plays, then pings against the royalty rate equals the money, and then there's got to be an intermediary somewhere and blah. Run us through that because that's fascinating to me.
Yes. So there's a whole stream of businesses called distributors. And the distributor's job is to work on behalf of the IP holder, whoever owns
Okay.
that IP, and
Okay.
go collect all the revenue that's owed to them. So they collect it from YouTube, they collect from Spotify, they collect from Apple, they go collect, from movies when it's played in the movies, or from the commercials if it's repeated in commercials. And so these distributors work on behalf of the IP holder. It's typically decided by whoever holds the master, which is one specific IP right on a song.
Right.
These distributors charge anywhere from 5% on the very bare bones low end up to like 25 to 30%. And I know it sounds wild, but some of these distributors really go to bat and go scrounge around and find lost revenue. Like it's something
Wow.
that people don't think about, but like, did Spotify Germany make their payment to us this month? Okay, there's, some upwards of thousands of line items of revenue that come in for every song that you own in a
Oh my
catalog.
God.
So it is a tremendous amount of work. And it's actually something where I think AI tools and the ability to
Yeah.
automate a lot of that review is going to make this asset class even more efficient. And I would say the opportunity to invest in music is now for the next probably 2 to 4 years. Because when it becomes too efficient and those discrepancies, can be spotted very quickly by an AI agent or AI tools, the ability to commoditize and make these assets into little widgets, which takes the yield out of it, is just going to happen. It's
Really?
such a steady cash flowing asset that if you even bring more automation and technological sophistication to the asset class, I think yields will compress, the risk will go down even more. And some of
It's
the
going to compress because you're going to take the cheaters out of the deal.
you'll be able to get every dollar an asset is owed. And so what will Wall Street pay for that? They'll pay very high multiples for certain revenue, right? Whereas today we actually have to do a lot of work, burn calories to get those dollars. And if we burn those calories, we can get these, high teens yields by doing that. But if it's so easy and automated, and it's, and there's not work to be done, that's where the yield gets driven out of an asset class in
Well,
our opinion. So
that was interesting to me because I was thinking that just before coming in late to our interview, was if for lack of a better word, everything has an application programming interface, an API, and so all of these people who are playing at that API goes into the master box, and then the master box in real time essentially charges them the fee. Then do I, as the licensee, do I pay like daily or weekly or by the hour, or how does that work?
So typically distributors are actually going collecting monthly or quarterly.
Oh,
Like the
okay.
big DSPs don't pay daily. Like the reporting is a daily feed, but you're not getting cash flow monthly. You're getting cash flow monthly or quarterly. Again, I think with automation, those cash flows could be accelerated. Maybe it could be a weekly pay down the road. But to be clear, if you're investing in music today, you could buy in at these indie catalogs at 5x multiples, which generates a 20x or 20% type yield.
Sure.
Then if in 5 years, the asset class becomes so efficient that people will pay way more for it, if you get in now, in 5 years, the price for those assets will be 10x, 20x, 25x, on top of all the other streaming tailwinds there are. So I think
so that's where I was going, is that
Mhm.
if you buy it essentially in the dinosaur age, and it evolves into the jet age, where this is real time, et cetera, you get an ACH or a wire,
Yeah.
probably an ACH, every 18 hours or something. And you're extracting, the cheaters don't work anymore. The cheaters get
Yep.
thrown out of the business. I'm with you. So there's an arbitrage essentially here of going from the Stone Age, for lack of a better word, to the 22nd generation, AI generation, real time. And that's a very, I feel like Johnny Carson. I did not know that.
I think that's right. I mean, the music industry itself has so many tailwinds. Like we said, society in general is supportive of the artists who are these intellectual property holders. They're
Sure.
supportive of higher payouts from the DSPs. Things like streaming penetration, like the US still has a ways to go in terms of streaming penetration, like signing up more individuals for streaming platforms. International has a huge opportunity, right? Streaming penetration in all these other countries is still low.
Yeah, very low. Yeah.
To grow revenue there of the DSPs that get sent back to the IP holder. So even all of that, Goldman Sachs says there's an 8 to 9% annual growth expected in revenue for global streaming revenue. And then you add on, like you said, the efficiencies in AI and the ability to actually fully enforce those IP rights through technology. And that becomes really fascinating because you already own the IP and then you just get more money for it. That's rightfully yours. So it's interesting.
I'm just thinking like a little bit in the future here. Tommy, you've been streaming my song for XYZ. If you don't pay, then you're cut off for tomorrow and you don't have anything to put, you can really enforce it in real time.
Yeah, IP enforcement is a challenge today. And that's why some of these distributors charge a ton of money because they do a lot of work to go find who's using this IP, how do you get paid from it. The good news is like the Spotify's, Apples, and YouTubes of the world generally do a great job and they're very sophisticated and honest and forthright companies. And
Sure.
So that revenue you can really rely on. It just as all the other, like anytime a song gets played in a stream, in a chain of restaurants, like if McDonald's has a playlist they play in all their restaurants, they're supposed to pay royalty rates on that. And
Sure.
and a lot don't, not calling out McDonald's, but there's
but it's the franchisees. The franchisees get the feed. Now, but how do they get the feed and not be on the hook for the royalties?
Well, the manager of a chain of restaurants could use their personal Spotify account to play in all the restaurants, which is not the correct license use, personal use, playing out to the hundreds of people in the different branches all day. That's not, you would need a commercial license use, which has a much different fee that compensates the artists in a more fair manner. So that's,
well, I think my Apple Music feed that that's been put together since Apple was alive. I was just listening to it this morning, and it blows me away that they, put this thing together based on what I've listened to over 25 years, and I listen to everything from acid rock to to Sergio Marconi movie music.
Love it.
It's amazing. And I don't have to pay for the right. I mean, I pay my subscription. My subscription gets diced up to pay the royalties, right? I mean, that's their major cost.
Correct. That's right. Yeah. Yeah. And then I think also the subscription dollar amount is still too low.
Yeah.
Like what we pay to access these libraries is still low. And it's because these DSPs were in user gathering mode for the last 5 years. And so I think the amount of the subscription actually has a lot of room to move. I'd say, it could even increase upwards of 50%. And I don't think there would be customer attrition. And again, that additional revenue just continues to be split amongst these rights holders. So
Yeah, I'm with you. In any type of subscription business, because I've only been in that for 40 years, uh, you get to a threshold. That's why you collect the bodies, because it covers your overhead. And then on the margin, as we like to say in economics, that next customer is 90%, profitable of the revenue. So I
yes.
understand they need to keep the core base subscribers, et cetera. And then does it matter the renewal rate? Do you have an idea about the renewal rate for? I read today or yesterday, excuse me, that uh, Google's uh, system is now the largest system for television shows. That when you go on, YouTube, that like I don't even know. Sometimes I'm watching YouTube. I think I'm watching a live, picture.
Yeah, well, YouTube TV has completely overtaken cable. I mean, it's incredible what YouTube TV did.
Yeah,
I remember a few years ago, I think my husband introduced my family to it, and our family started using YouTube TV instead of cable, and um, wild. Like it's totally overtaken the market. I'm not as privy on traditional media or streaming media for TV and
sure.
YouTube. That's not my area of expertise. But I mean, it's been incredible what they've done with that product. I don't know specific retention rates across Spotify and Apple for the music streaming. I would be curious. I know overall, year over year, the growth, continues to compound, whether that's just new subscribers or a fall off of existing. It's my understanding it's incredibly sticky, but I'd have to look at the specific
Yeah.
data.
Well, again, YouTube. We play on YouTube.
Mhm.
You see an ad, every whatever 15 minutes. And one day I'm hoping the producer will get a share of that. I haven't seen a nickel from it yet, but I understand in theory that's how it works.
Me
But
too.
but when you look at the when you come in and put these deals together, so you raise money from institutions. You have $5 million, and then your job is to go put that together. How long does it take you to put $5 million out to acquire these rights and pay or buy the royalties, I should say?
Yeah, so we play in the indie size, like I said. So we'll buy everything as small as 200,000, all the way up to $5 million catalogs. Right now, at our current clip, we're working out and we're putting $50 million out on the street over the next 12 to 24 months.
Wow.
So you can think of that as, like $2 to $3 million a month is the goal. We're slow and steady is winning the race here, that's for sure. And it's really about getting in at the right prices and being very disciplined on the multiples that we pay. And we pass up and we lose a lot of deals because of our pricing discipline. And it is hard when owners of IP really think it's worth more. Like if there's a big sync revenue in the last 12 months, we
Yeah,
can't rely on that to be consistent.
sure.
And the name of the game for Pier Asset Management, which is my firm, is
Yep.
investing in steady, consistent, predictable cash flows. That's what we look for. And so the goal is paying a multiple that will support that cash flow over time, and will get us into those yields that we're looking for.
Well, I was so impressed. You guys were nice enough to send me a due diligence package on your program. I do these special purpose vehicles. We call them SPVs in the world, for things just like this, where the average investor, I mean, the accredited investor, but they don't have $5 million to go, hey, Jillian, go, make this happen. So we're going to do like a $5 million SPV, where people can come in for $25,000. And the yield, I mean, again, looking at your data, we could expect to get near a 20% yield all in, particularly at the back end, right? Where you get the royalties and then you get so go through the process of how many cash flow streams you guys have.
Yeah, so investing in music, the way that we strategize here is we like to invest, get current pay. So when you buy catalogs outright, you get a current income that can be paid out as a dividend. So it's a cash flowing asset, which is great. So, if you're an investor in private equity funds, typically it's like a J curve, right? You're spending money,
Yeah.
you don't start seeing any of this cash until year 3, year 4, sometimes year 5, 6. Whereas in music, you invest and if you buy that IP day one, you're earning, you're earning royalty income. And so that's how, the strategy is so attractive to us as a cash flow investor.
Yeah.
Then from there, you can hold your catalog in music. So being a music investor, you can hold that catalog for a number of years, cash flow it. And something that you could look to do is, we would look to go and sell our catalog.
Sure.
So it's, hey, after 5 years of holding this, let's take it out to market and see what will the market pay. If we've been buying catalogs for 5x trailing 12-month multiples, but right now, actually today, market is about 10. Like if we can sell and flip that portfolio at a much better multiple, that really adds juice to the ROI, what we're targeting. So
why has it gone from 5x to 10x?
So the banner catalogs are trading at 20x. The big funds.
So you're talking about Springsteen, you're talking about
and Pink Floyd. Whereas the smaller catalogs that are being bid on by these retail online peer-to-peer exchanges, there's so much competition that those are being bid up and they're selling at 10x, 11x, 12x. And so those are, not as interesting of yields. You're talking high single-digit yields when you're paying those prices. We traffic in an area where we're not competing against the billion-dollar funds because it's not worth their time to spend $1 million on a catalog. So we're not competing against them. And because we're one of the only buyers around the table for a smaller catalog, we get a control pricing. And it's typically the seller's choice is either, I'm going to hang on to this and just let it cash flow, or sell. It's usually not, so competitive. And that's how we're able to get those multiples down, push those down to like the 4x, 5x, 6x, which creates these yields that are much more attractive to us than buying something at a 20x.
When you buy the royalty, Jillian, you're buying just the royalty for the one song, let's say. And let's say all of a sudden that song becomes super popular. You're getting all this upside because you're on the same royalty rate, but it's now playing 100 times a second, right? And so, so does anybody have you got any like music experts there, Jillian? A hit maker?
Yeah, so it's funny. So we do not say, hey, we're going to be the next talent scout and we're going to go find Justin Bieber. The funds that say that and the businesses that go
forget him.
that,
I want Haley. I don't want Justin.
They have, I don't love it. They have huge overhead and big operating expenses, and they have to, and they're investing in artists very early when a song is released. So they say, oh, we identified this artist 5 months into the song being released. Well, if you actually look at the cash flow of music, you see that on day one and year one, the song produces the most revenue it's going to produce. It drops off a cliff at about 18 months, 2 years. And so if you buy a song in that first 18 months, the predictability of what it's going to produce for you is very questionable. And so we don't want to be in the business of making bets and gambling. We buy songs that are 2 years old to 10 years old. Once they have proven cash flow and they've hit this kind of bottom of the decay curve is what we call it. And so if it's producing $20,000 a month, we have very good sense for, hey, it's only going to decay by 2% per year for the next 10 years, and we model it out that way. Buying a song at month 6, like being a talent scout, as you were saying, it's gambling. And you may end up with this huge hit that actually grows in virality, but you also may go, you may price it off of that and pay way too much for something that ends up producing $2,000 a month. So for us, we buy predictable, stable cash flows. We're not a talent scout. We actually had a song go viral this past fall that was in our catalog. And this song went from paying something like $3,000 a month to $20,000 a month. We're like, what happened? And someone used the song in a TikTok dance, and the dance went viral. And so then everyone's doing a dance to this song for a few months. And so it was great. It was a lot of fun to enjoy that in the portfolio, but we don't underwrite to that. And we're not trying to find the next TikTok viral song.
Well, Jillian, it's funny. We're on the same wavelength there. I was going to ask you, well, what happens if I play my favorite Joni Mitchell song while I'm giving a speech about investing in royalties, and it's on Instagram and YouTube and all the other stuff that I stream on? How does that work? Do I owe royalties?
So that's called created content, and it would be YouTube. Well, that would be paying out from YouTube, and so YouTube would end up paying, and it's actually one of the hardest areas to diligence. So when you get a catalog of songs and we're looking at it and what should we pay, like user generated content on YouTube is the hardest to diligence. Like, is that video that Toby created going to continue to be popular or not? It's really hard to tell. So some people give those, like if it's like a how-to video, with a song in the background, the how-to videos actually have a lot of staying power. Whereas if it's like market commentary of the week, like
Yeah.
maybe that, like that's not going to be listened to for the next 10 years, likely. You know, maybe someone will go check what happened that week, but it's not as sticky.
Yeah.
And so pricing those user-generated content is very challenging, and often for us, we just strip it out, but others pay for it, but it's just so hard. And it's hard to collect on actually too. So
I bet.
yeah, it's an
Yeah.
area that is tough. It's not easy. Like the streaming revenue from the DSPs playing your song for personal use through the subscription is like the steady Eddie revenue that can be understood and audited and diligenced, whereas the user generated content on YouTube is just very tough.
So just going back to your example of the song that blew up, how much was it? You said it was doing like 2,000 or 3,000 a month, and that was just based on plays that were on everything from YouTube to other places. And then when it blew up, who kept score that it went from this amount of plays to this amount of plays, and you owe this amount of much?
Yeah, so the distributor goes and checks TikTok and says, hey, every month or every month, every week, every quarter, depending on the cadence, they'll go on behalf of your song to TikTok and say, hey, what do you owe us this quarter, this month from playing XYZ song? That's the distributor's job. And so the distributor goes and does their work with TikTok that month, and it's a huge payment. It's like, great. And then we went and investigated, why is there this huge payment? And it's the song went viral. And at that point I said I probably should download TikTok and become a social media person, which has not been my my area, but it's
come on, Jillian, it's the 21st century, for crying out loud.
I know, I got to step into the new era.
Well, you got Reels now that is also part of Meta, that's blown up. I'm using theatrical terms, blown up. You have so many, and then in Europe they have their own TikToks, etc., that are all blah blah blah. So if my song gets into like the small system in Switzerland, the distributor still is the one who's collecting the dough.
Oh, yes. And if you have a great distributor, they're going to know all the new streaming platforms that have popped up, the ones that matter to chase after. And yes, so that's their job.
Wow. So I love the idea. So when we do our SPV to our listeners and subscribers, et cetera, to this, and our subscribers, et cetera, we'll put together, a prospectus on it, et cetera. But I just, and plus, by the way, we also work with Madison Guarantee so that people can invest in our SPV with their IRA or with a Roth IRA, or like me, for a corporate pension plan. So that allows people to, particularly if it's in a Roth IRA, for crying out loud, just money coming in, money coming in, money coming in. And then, one thing that we like to do is sort of reinvest, like reinvesting on dividends. So is there a way our SPV just retains all the revenues and goes up, and then before we get to the end of the year, we say, hey, listen, do you want to keep your dividends in there, and we'll just put more money in? Or is that possible with you guys?
Yeah, we have an option to reinvest.
Yeah, awesome. See, and then you're gonna have to come up with the Tobin Smith catalog of my favorite songs, darn it. And it's probably, the royalties are probably worth a good $200-300 a month, but
too funny. So it's funny, we have a playlist in our office of all the Pier owned songs, and so
really?
We play that playlist. And I will tell you, we are disciplined financial investors here, and we care about cash flow and what the numbers tell us, and not as much if we like the music or not. And I will tell you, there's a large portion of our catalog I do not enjoy listening to, and then there's a portion that I love that I play more often on my own. But it's funny, there's definitely music I'm like, who is listening to this? But a lot of people are, so that's fine, and we own it, and like we just look at these as financial assets. I think that's the benefit of us, is we are finance first, and there's no emotion in the decision. It's like, what do the numbers say? How does the revenue look on a trailing 12-month basis? Have we sanitized it? All that good stuff. And then it's like, after the fact, let's listen to this. So
hey, a quick question, and I want to ask people to let people know how to contact you guys. So what about Sirius Satellite and some of the others? I would assume they're a pretty big payer on royalties.
Yeah, so radio is another sector that gets paid out. It's digital radio. There's still analog radio. So it's it's a significant real portion that
Well,
gets
I'm talking
paid.
about the satellite guys.
Yeah.
Yeah,
So
okay.
satellite radio is a payer that would be on your distributor statement.
I got it. Wow. All right. So somebody's all excited about this. How do they get a hold of you?
So you can find us at Pier, Pier, A as in asset, M as in management.com. That's peeram.com. If you want to learn more about us, we have a newsletter. We talk about all different areas of specialty finance, music being one of them. So we've got some charts that go out monthly and some other educational information.
Cool.
So you can sign up there to stay in touch. And we have a contact us form there to find us.
Outstanding. Well, Jillian, it's like it's so fun to be in the media business of investing because I learn something every friggin' day.
Well, it's so great to talk with you. I appreciate you taking the time.
Hey, my best. All right. There you go, ladies and gentlemen. You want to make big cash flow? You want to tell your friends that you own freaking the Beatles song? Get to Pier AM, baby. All right. Cheers. Thanks for being with us. See you next week.
Thanks.